This Saturday on 8th November, double the insights, double the growth. By 11 a.m., we have group health cover versus personal policy. Why you need both. Know why you need both the insurance to keep your family protected. At 12 p.m. IST and 10:30 a.m. GST, we have smarter wealth creation for NRIs. Learn how to make your money work beyond borders. Link in description. Join this webinar to make your weekend an actual learning weekend.
What started as an experiment on January 1, 2023 has now become an experience. I'm talking about the boring stocks portfolio that I curated with 10 companies, predominantly large cap companies in our market. Each company weighted equally, so the portfolio will have 10 stocks with 10% each, and we wanted to see how this portfolio beats the Nifty 50 TRI or struggles to cope. The experience has been extremely engaging, exciting, and also educating. One thing that we emphasized in this portfolio is that you can change stocks only once in a calendar year. Starting on 1st January 2023, we didn't make any changes through that year. On Jan 1, 2024, we made some changes. We changed 3 companies and brought in 3 new companies. Subsequently, we have made no changes over the last 22 months. This month also, we are not going to make any changes. Now, for the benefit of new viewers, I'm going to tell you which are these 10 stocks that are there in this boring stocks index. The stocks are HDFC Bank, Coal India, Reliance Industries, Bharti Airtel, Maruti Suzuki, ICICI Bank, Larsen & Toubro, Britannia Industries, Sun Pharmaceuticals and ITC Limited. None of these are exciting names like the ones you hear. But the interesting part is, we started with a portfolio of 1 lakh, 10,000 rupees in each stock. The idea was to put that 1 lakh in the Nifty 50 TRI and another 1 lakh in boring stock index. What happened to this 1 lakh? Over this entire period, 1 lakh invested in the boring stocks index has become 1,90,226 rupees, a gain of 90.23%. In this, 1.55% comes from dividends. So, it's been extremely interesting, it's been extremely engaging, and the stocks that contributed very heavily in this journey are Maruti Suzuki, which has given 45% returns, Bharti Airtel has given 30% returns, Reliance Industries 22.2% returns, Britannia Industries has given 23% returns. You have HDFC Bank giving 12.9% returns, Coal India giving 2.8% returns, ICICI Bank 6.66% returns, Larsen & Toubro 9.3% returns. 2 stocks are given negative returns, Sun Pharma minus 9.4% and ITC minus 11.7%. Now, these returns are for the period Jan 1, 2025 to today, that is October 31st, 2025. So, we are entering a very, very interesting phase. We can make some changes if we want on the 1st of December for this year, which will keep the opportunity open to make more changes next year if necessary. I am toying with the idea, but not sure if I should do it, because why should you change something which is already doing decently? That's the question on my mind. I'm sure you will agree with me. Boring Stocks Index compares very well against the Nifty 50 TRI for the entire period starting Jan 1, 2023. The Nifty 50 TRI has delivered 47% return. 1 lakh has become 1,47,003 rupees. The Boring Stocks has given 90.23% return. So 1 lakh has become 1,90,225 rupees. Now this is a huge beat for a fund which has been in existence for a very limited period with very tight rules, very disciplined investing and very limited choices. It also makes me wonder on the argument that you need to go down and buy small companies to make better returns. I don't think that is necessary. Now, let us see what has happened in the last 1 month. In the last 1 month, you have seen the Nifty 50 giving returns of 3.67%, while the Boring Stocks returned 3.75%. So 1 lakh became 1,03,668 in the Nifty 50 TRI and it became 1,03,751 in the Boring Stocks Index. So it's a close race in October between the two entities. Now, which companies delivered returns in the Boring Stocks Index in the month of October? 3 companies gave outlier numbers. The best performer was Bharti Airtel, 10.64%. Reliance was very close, 8.75%. And Larsen Toubro was third with 8.64%. So, in 1 month, these 3 companies are given excellent numbers. Then you have 3 more companies which have more or less given the index returns. You have Sun Pharma giving 4.11. You have ITC giving 3.57 and you have HDFC Bank giving 3.41. So, you got 6 companies which delivered good returns and you have some companies which were a drag. You have Britannia which gave minus 2.22% returns and you have Coal India which gave minus 0.21% returns. You also have ICICI which gave minus 0.7% returns. So, 3 companies are giving negative returns. That comes to 9 companies. Then there was Maruti Suzuki which gave 1.51% returns. So, if you look at this portfolio, 3 companies have done the heavy lifting, 1 company has been very soft, 3 companies have given negative returns and 3 companies have given nifty returns. But over a long period of time, some companies pull away, give extraordinary returns, and when you have higher weightage than the index in those companies in your portfolio, you are going to beat the index by a wide margin. So, that's essentially what we need to do in a large cap portfolio. And that's what the Boring Stocks Index is experimenting with month after month all these years. Now, let us see what happened in the last 10 months, that is the period beginning January to now. If you invested 1 lakh on January 1st, 2025 in the Nifty 50 TRI, it would have become 1,09,628 rupees. That is 9.63% returns. If you put the same 1 lakh in the Boring Stocks Index, 1 lakh becomes 1,13,754 rupees, which gives 13.75% returns. So, here we have a clean beat of 4.12% over the Nifty 50 TRI in this calendar year. What caused this? Again, Maruti Suzuki is the best performer, followed by Bharti Airtel. Maruti gave 45.8% returns this year so far. Bharti has given 30.5%, Reliance has given 22.3% and Britannia Industries has given 23.8%. So, these are the stocks that did the heavy lifting. Then you have HDFC Bank giving 13.5%, Coal India giving 4.5%, ICICI giving 7% and Larsen giving 9.7%. So, you have 8 stocks giving positive returns. And the 2 laggards are Sun Pharma with minus 9% and ITC with minus 10.5%. But this beat again has been a very, very significant one, because when you beat a benchmark that win a large cap by over 4%, it means that your portfolio has better dynamics than the index. It's important to always look to create this better dynamics in your portfolio, whether it's large cap, mid cap, small cap, whatever. But doing it in large cap is extremely interesting. It's extremely challenging because the choices are limited. The options have to be chosen precisely and the timing has to be impeccable. We have been lucky this year so far. Let's see if we are going to make any changes on December 1. If not, we have the option of making them on January 1. This phase has been a phase of learning for us. We have definitely come a long way from where we began on Jan 1, 2023. But the boring stocks index is anything but boring as far as I am concerned. It's teaching me a lot. It's keeping me engaged and it's educating me all the time. I hope you enjoyed this video and the whole experience of being with us in the boring stocks portfolio and staying invested in the boring stocks index. Thank you very much.